Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, 16th December, London Open Prep. Here are the key themes shaping the start of trade. A delayed and unusually messy U.S. jobs report has the dollar on the back foot. Asian stocks are weaker on a tech-led pullback, and haven metals and oil are slipping as talk of Ukraine peace gains traction and China's data underwhelms. Let's start with the macro backdrop. The U.S. dollar index has softened below recent ranges ahead of today's combined October and November jobs release, which the statistics agency has warned will carry higher than usual variances. Markets expect a weaker hiring picture, but the mix of revisions and methodology changes means reactions could be noisy. For traders, that matters. In Asia, equities followed Wall Street lower as investors rotated out of the artificial intelligence trade. South Korea led losses, while the yen stayed firm, with markets increasingly convinced the Bank of Japan will raise rates this week. Meanwhile, the onshore yuan strengthened even as Beijing signals a pragmatic 2026 growth target near 5% and prepares additional policy support next year. Commodities are easing. Oil is under pressure on two fronts: optimism around Ukraine peace talks and softer Chinese indicators, with U.S. crude and Brent extending yesterday's declines. Gold has retreated from 7-week highs on profit-taking and a brighter tone around geopolitics, and silver slid sharply after failing to hold short-term technical support. In India, local gold prices also fell. On the policy and geopolitics side, the United States has suspended a recently agreed technology partnership with the United Kingdom amid wider trade tensions, raising questions about transatlantic cooperation in areas like artificial intelligence and quantum. In Europe's industrial landscape, remaining solar equipment makers are banding together to counter competitive pressure from China, a reminder that supply chain and strategic tech themes remain live for the region. Turning to markets and sectors, the softer dollar is broadly supportive for risk sentiment, but the bid in the yen and weaker Asia stocks argue for some caution into the European Open. Oil's slide on peace talk optimism typically weighs on energy shares and can be a modest headwind for commodity-linked currencies. The Indian rupee remains under pressure, hitting fresh lows on flow dynamics, while the Canadian dollar is steady, with dollar Canada trading in a tight range ahead of the data. Looking ahead, it's a busy one. The UK labour market report lands at 07 London time, with unemployment seen edging up. Flash purchasing manager surveys for Germany and the Eurozone follow at 8:30 and 9 a.m., and then the delayed U.S. jobs report that could deliver volatility without clear conclusions. What I'll be watching today: dollar-yen looking for a downtrend to persist if Bank of Japan hike expectations hold and the U.S. dollar stays soft. Euro-dollar watching for an uptrend if Eurozone activity beats and the jobs print doesn't mescue the greenback. Sterling dollar could be choppy around the UK jobs release. Dollar Canada may drift higher if crude stays offered. And in commodities, I'll watch gold for a pullback to stabilize pattern if peace headlines keep risk calmer. The takeaway: sentiment is cautious into a data-heavy day, and while the dollar is softer, conviction may have to wait until the dust settles on a complex jobs release. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.